Hey friends, welcome back to another episode of Making Sense of Your Market. Boy, I've got a good short video for you today that's going to help you make sense of some of the garbage that I continue to see on social media, specifically Instagram and Facebook. These people are mortgage professionals, mortgage people. They're not professionals. They're mortgage people and real estate agents that are just chasing views. They're just chasing going viral or whatever, but they're publishing, I don't say poor information, but misinformation that's impacting people's financial decisions, whether or not they buy real estate, whether or not they upgrade for their family, whether or not they move. This particular video I'm going to play, it's 1 minute long. I'm going to play this for you. And it's a social media influencer that's a real estate agent out of the Midwest. And she says, this is why people aren't selling their homes and buying another. Take a look at this. I'm going to come back and explain it to you in 1 minute. But I'm going to share information with you that should be in the form of a disclaimer. And I think when people are making these videos, they need to be able to disclaim that, one, it's not financial advice. Number two, that there's another side of this pillow. There's another side of this story. I'm going to come back and I'm going to share this with you. And it's a perspective that I personally in my own financial life has used and believe in. And it's also a perspective that, in my opinion, is the quality advice here. Take a look. We'll be back in 1 minute.
A $550,000 home with a 2.5% interest rate, but we don't like the neighborhood. Should we sell or rent it out? Well, let's crunch the numbers. This is why so many people do not want to sell their home right now. Let's say in 2020, they bought it for $400,000, got a loan for $360,000 at 2.5%. Their payment was somewhere around $2,000. Now, 4 years later, their home is worth $550,000. Their property taxes and insurance probably went up, so we'll call it $2,250. If they end up selling, they'll probably end up paying about $30,000 in closing costs and fees, leaving them with $520,000. They owe $262,000 on the loan, so that'll give them $258,000 cash to bring to the next home. Let's say they upgrade to a $750,000 home. $20,000 in closing costs, leaving them $238,000 to put down. Taking out a mortgage at $512,000 at 7%, their new monthly payment would be $4,406. So going from a $550,000 home to a $750,000 home with a large down payment, their monthly payment has doubled.
Okay, so she builds a case for this is why people aren't selling, because your payment is going to double. If you were to that upgrade, key word here is upgrade, to a $750,000 house from a $550,000 house, that your monthly payment is going to double because of high interest rates. This is why people aren't selling. What I want people to realize is the key word here is upgrade. If you drive a 2020 Toyota SUV and you upgrade to a 2024 Lexus SUV, which is manufactured by Toyota, I believe, that's an upgrade. You're going to pay more for that car, right? And you're going to pay more for that monthly payment if you finance it, right? Of course, it's an upgrade. That's what an upgrade is. In real estate, we upgrade because we've outgrown the house. That's a need. We upgrade because we want our kids in better school districts. We upgrade because we want to move to a different community. We upgrade typically too because we can afford it and we're making more money. So the fact that the payment almost doubles, your income, of course, has gone up. The other thing is the appreciation on a $750,000 house is slightly more, to the tune of about $1,000 a month more in appreciation than a $550,000 house. But the key word here is she should not have used upgrade. If you're upgrading, there's an assumption that you're going to pay more, right? So my encouragement to you as a client of mine or someone watching this is, if you need to upgrade, if you can upgrade, evaluate both sides of it. Yes, the cost because interest rates is going to make the monthly payment a little bit more, but here's what she didn't mention, that the Fed has already disclosed that they're going to be dropping interest rates in the coming 12 to 18 months. And when the Fed drops rates, typically mortgage rates follow. There's data there that supports that. With a mortgage, you can always go and refinance your mortgage and drop that. So maybe, the payment might be $4,400 a month in this case, but if rates drop a full percentage point, maybe the payment's now $3,400 a month and you're only paying $1,000 more a month to upgrade. And by the way, it's appreciating at about $10,000 to $12,000 a year more. So that's about $1,000 a month there. That could equal a wash for upgrading. I don't know. I like both sides of the story when I'm looking at large financial decisions. I don't know about you, but if you have any questions around this, I want you to reach out to me. I love being a resource to you, and I appreciate you watching this. If you found it valuable, maybe share it. If you're a client of mine, I appreciate your business. Till next time, take care.